Good evening, students. Welcome to the live learning classes organized by Board of Studies, ICAI. We are going to discuss in today's evening on this topic called returns under GST law. Before we start with our discussion, as a protocol, students who are listening me online, please confirm you're able to listen me properly and also able to see my screen properly. Audio is clear and video is also clear. Good evening, Viraj, Rahim. Thanks for the confirmation. Good evening, Shailesh. Thank you. Thanks for the confirmation. So, students, what we will do, we have discussed in our previous session on this topic called payment of taxes. Payment of taxes, where I have explained the provisions of section 50, which deals with interest computation. I'll quickly start with a recap of section 50, where we will discuss these provisions, how we will calculate interest. 50 subsection 1, 50 subsection 3. There is a importance for this provision 50 subsection 3 for the reason there has been an amendment in this 50 subsection 3 where they have mentioned how do we calculate where this input tax credit has been utilized. Their input tax credit has been utilized. How we have to calculate that particular computation. So for that purpose, we will just understand 50 subsection 3 and also the rule connected with this, right? Let me just connect my screen. Yes. So first to start with 50 subsection 1. What we have learned in 50 subsection 1, whenever there is a delay in payment of tax, we are supposed to pay interest to the government, right? This is a basic aspect. While discussing this under 50 subsection 1, we have discussed that there is a delay because of receipt of payment from my customer. So when I make the payment, I ought to make the payment using electronic cash ledger, electronic credit ledger, right? So I'll give one example. I'll insert one blank screen. Let me do that. Now, when I talk about my output tax, we keep in mind that this output tax can be paid using cash ledger, using credit ledger, right? This is how I make the payment. I gave an example where for month 1, there is a supply which was made for rupees 10 lakh at the rate of, say, 18%. Month 2, RA bill is approved and tax invoice issued. Month 3, month 4, month 5, no payment received. In month 6, client accounted and paid for the bill. This is a factual scenario. So this taxpayer who has raised his tax invoice in month 2. Now in month 2 on 10 lakh, 1,80,000 was a invoice put together, issued to the client. This is what we have discussed. Now assuming for a moment the composition of this 10 lakhs, I have mentioned that, say, material labor, and profit. All put together is my value of supply. So material value is, say, assuming 6 lakhs. Labor value is 2 lakhs. Profit portion is 2 lakhs. My value of supply happens to be 10 lakhs. On material, assuming I have paid tax at the rate of, say, 12%. On labor, I have paid tax at the rate of, say, 18%. This is how my composition of taxes. On 6 lakhs, the tax what I have paid is 72,000. Assuming this tax on labor, 50% alone is subjected to tax. 50% is URD purchases. 50% is regular purchase. 50% is URD purchase. On this URD purchase, regular purchase, that is 1 lakh. On 1 lakh 18,000 happens to be 18,000. This is my composition of input tax credit, right? Now, when I have to pay my output tax, 1,18,000 is my output tax, on which 90,000 happens to be my input tax credit. So the gap between these two, 28,000, is, this is my ITC, and this is amount to be paid in cash, to be paid in cash. Now, most of the civil contractors, they would come across this scenario where they commence the work, but there was an inadvertent delay from the client for making the payment. The civil contractor says, sir, whatever little money I have, I've used that money for purchase of material and purchase of labor. So I have left with no money to pay this particular cash of 28,000. Now, assuming in the month of month six, GST payment is made. GST payment is done. Now, there comes interest under section 50. Interest under section 50. This is what we are supposed to calculate. So here, the government says that if this return is filed, voluntarily, that is, without any audit under section 73 or 74, then without any audit, then they say interest to be paid on rupees 28,000 alone. Rupees 28,000 alone. Why? The government says, look, already the input tax credit, which is used for payment of tax, has been received to the government. This has been collected from the supplier. By virtue of this, the provision says that pay interest only on the net cash portion. This is what section 50, subsection 1 talks about. So here, they say that any return furnished after due date. Why do I furnish my return after due date? Majority of the cases, cash flow issue. Other than any proceedings under 73 or 74. 73, 74, section 73, section 74 is a adjudication proceedings. That means they propose to recover tax by issuing show cause notice. So government says that, look, if you have filed your returns before issuing a show cause notice, then interest under section 50, subsection 1 is payable only on cash portion. Suppose if I file my return after receipt of notice under 73, 74, then interest is applicable on entire tax. On entire tax, interest to be paid. Interest to be paid. Interest to be paid. This is what we need to understand with respect to 50 subsection 1. Let me see any doubts. Good. Now, from here, we move on to, I think, let me just erase this. The rate of interest notified is 18%, though the higher says higher it says not more than 24%. Now, 50 subsection 1 read with rule 88B. This is a amendment which happened in 2022, where most of the GST assessment, most of the GST audits, we have to understand how do we calculate interest on input tax credit wrongly availed and utilized. Wrongly availed and utilized. I'll insert a couple of slides before we discuss. Now, this aspect of input tax credit, 50 subsection 3 says that when input tax credit has been wrongly availed and utilized, registered person shall pay interest on such input tax credit wrongly availed and utilized at such rate not exceeding 24%. Right? This is what the provision says. Now, I'll explain where we come across this particular input tax wrongly availed and utilized. Input tax credit wrongly availed and utilized. Now, when we do accounting, there could be a clerical mistake. What is a clerical mistake? The bill which has come for 1,20,000 has been accounted as 2,10,000. Bill which has come for 1,20,000 was entered as 2,10,000. Now 120, 210. Now this is just a clerical error. This is actual. This is entered. Now, this may happen where I have done a erroneous data entry. Now, if you ask, sir, this is an entry done in your books, will this mistake be occurred in your returns? Answer would be, when I file my returns, probably when the data entry happens. Now, please keep in mind, students, today, when I touch upon GST returns, I'll show you the return. I'll also explain where we do this data entry and where this mistake is prone to happen. Okay. So here, the mistake happened is the value of supply was entered wrongly. According to this, my tax also has been wrongly computed. Probably this is one set of mistake. Second, duplication in accounting. Probably I have accounted invoice number 22. The same, this was say accounted in August 23. The same invoice again has been accounted in September 23. Now, there could be a system validation. System may alert that this invoice already exists, or I would insert some space to accommodate this particular entry. This could be another scenario where I've done a data entry mistake. Third, the most common mistake, accounting interstate as intrastate or vice versa, where my tax invoice just mentions GST without breakup. There could be scenarios where I'll give an example of this freight on outward supply. Freight on outward supply to a place outside India. As per your place of supply provisions, a point in time, supplier and service provider both are in say state 1. Place of supply is considered as 97 other territory, or I would say outside India. Now, assuming for a moment, supplier is in state 1. Let's call Tamil Nadu. The service provider is also in the state called Tamil Nadu. But when place of supply is 97, this transaction will be called as IGST. There was a point in time where the GST provisions have explained place of supply provisions. Now here, while doing the accounting entry, the tax invoice didn't say SGST, CGST. Looking at supplier, my supplier is, service recipient, I should say, service recipient. So supplier is in Tamil Nadu, the state code 29. Service recipient, that is the customer, is also in my state code for Tamil Nadu is 33. Service provider is in Tamil Nadu. Customer is also in Tamil Nadu. Looking at this both state codes, generally we as an accountant, we have a tendency to account that as CGST and SGST. But when actually you see the supplier, that supplier would have uploaded IGST. This could be the third scenario where there was a mistake which took place. Now, all these cases, ITC has been wrongly availed. Now, this concept of utilization comes, when I have exhausted the ITC. I'll give you an example how this utilization is examined. Let's take example, say month, actual, avail, utilized, closing balance. Say IGST, CGST, SGST. IGST, CGST, SGST. IGST, CGST, SGST. IGST, CGST, SGST. Say for month 1, my actual IGST is say 100 rupees. For a moment, no CGST, no SGST. While accounting or while availing, this is where the manual data entry has been done. While accounting, I have accounted this as 120. No CGST, no SGST. And utilization for the month of 1, I have used IGST to the extent of 60 rupees. CGST nil, SGST nil. My closing balance happens to be, to the written 120 has come. From 120, 60 rupees has been exhausted. Balance happens to be 60. CGST nil, SGST nil. This is how my GST electronic credit ledger is updated. My electronic credit ledger. In credit ledger, there is a credit entry for availment. There is a debit entry for utilization, and this happens to be my closing balance. I avail ITC of 120, I utilize 60, closing balance happens to be 60. So for month 2, my actual is say 50 rupees, CGST is 100, say 120, SGST is 120. While availing, I've availed IGST 50 rupees. I have exhausted, say, accounted CGST of, say, 100 rupees, SGST 100 rupees. And utilization, by utilizing, say, I have utilized 60 rupees of opening balance plus 50 rupees of current month. 60 plus 50, 110 has been exhausted. From CGST, say 50 rupees was exhausted. From SGST, 50 rupees is exhausted. And closing balance for the month, 60, my opening balance, plus 50, 110, exhausted 110. So my closing balance will be nil for IGST. For CGST, opening balance is 0, input of 100 rupees, debit of 50 rupees, closing balance happens to be 50 rupees and 50 rupees. This is how my closing balance is derived. Now, please look at this month 2. Month 2, when you look at my closing balance. Month 1, when you look at my closing balance. Now, the gap between what to be availed with what availed, this gap is, say, 20 rupees. Section 50, subsection 3 says that interest to be paid on ITC availed and utilized. This is what my GST provision says. ITC availed. Now look at month 1. In month 1, my input tax availment is 120. I repeat, month 1, my input tax availment is 120. How much is utilized? 60 rupees was utilized. Now there are theory. FIFO basis, LIFO basis. Department may say, the GST officer may say, whatever 20 rupees was there, this has been utilized first. Balance after that, from 100 you should calculate. But GST provisions are very clear. Section 50, subsection 3 clearly says that when you want to calculate this availed and utilized, check the closing balance. Check the closing balance. If closing balance is greater than this wrong availment, my closing balance less than wrong availment. If closing balance is higher than wrong availment, not utilized. Now, this has happened in the case of month 1. In the case of month 1, my closing balance is 60 rupees. What is a wrong availment? My wrong availment is 20. The provision says that because you have sufficient input tax credit, in case if the GST officer is asking you to reverse, I repeat, if the GST officer says, Praveen, reverse this particular 60 rupees, 20 rupees. Do I have sufficient balance? I have sufficient balance in closing balance. So they say you have not utilized that particular input tax credit. In case of month 1, no interest. Now when I travel to month 2, month 2 is a scenario where my closing balance happens to be nil. And whereas the actual, my wrong availment is rupees 20. My closing balance is less than the gap. Now, in this is a case where they say ITC has been utilized. Now, this is a case where interest under section 50, subsection 3 has to be paid. And students, for your computation, Rule 88B has been specified how this computation has to be dealt with. Please read this particular provision carefully. Reason, you might have, you would be attending GST audits once you are completed with your exam. For the reason, this is a period where 17-18, 18-19 GST audits are happening. In this case, in this scenario, wherever you come across this kind of ITC wrong availment or utilization, probably entry happened because of clerical mistake. Probably ITC availed because of duplication, or probably wrong interpretation or wrong accounting of interstate supply as intrastate supply. Any of these scenarios will call for my payment of interest under 50 subsection 3. This is what we have to understand. This is where we stopped our previous discussion. Let me know, students, you have any doubts in this regard? Any doubts in this regard? Please let me. 50 subsection 1, 50 subsection 3. Are you clear with both these provisions? There is one question from Rahim. In example, which I was talking about 50 subsection 1, Rahim is asking, out of 2 lakhs, 1 lakh is from registered dealer, 1 lakh is from unregistered dealer. Should we need to pay tax under reverse charge mechanism for that labor? Rahim, as of now, 9 subsection 3 doesn't say for manpower contract, you need to pay tax under reverse charge. I repeat, 9 subsection 3, there is no notified list for manpower to be paid under reverse charge. But when you travel to 9 subsection 4, which is in relation to a real estate contract, in case of real estate contract, builder, there's a norm that 80% of the purchases should be from a registered person. So if you have any shortfall from 80%, then the balance amount I have to pay tax under reverse charge. So for your examination purpose, my builder or real estate transactions are outside your syllabus. Only 9 subsection 3 you have to remember. So there is no reverse charge for that 1 lakh on which you have to, which is an unregistered dealer purchase. Hope I have clarified, Rahim. Next, we will, the next topic under discussion is tax deducted in source. I believe last session, e-commerce operator, that is e-commerce transactions, you had a lengthy detailed discussion. What is an e-commerce operator? Who is an e-commerce operator? What are the conditions connected with e-commerce operator? How does it operate? How the payment of taxes happen? So here, we will study only with respect to section 51, which deals with your TDS provisions. I'll just give you a backdrop why this 57 has come into picture. This TDS provisions 51 have come into picture. I'll insert a couple of slides and then I'll come back to this. Now, TDS, TCS. The way we have read TDS and TCS provisions under income tax, the similar concept is applicable even under GST also. TDS is applicable for precisely the government sector undertakings. TCS provisions are connected with your e-commerce transactions. Now, for collection of tax, there should be a proper database. Administration is possible when there is a proper data for supplier of goods or services. Goods or services. Please remember, under GST, the payment of tax is on self-assessment basis. Now, when I say this, government may not get the revenue if the taxpayer or registered person defaults, or I would say suppress the data. For a moment, let us look at the transaction. A registered person who supplies, there could be a supplies of B2B, there could be a supplies of B2C, there could be a supplies of exports, right? This is how I classify my taxable supplies. I classify my taxable supplies. Under GST law, some like your income tax provisions, we have Form 26 AS. Under GST law, all B2B supplies, there is a form called GSTR-2A or 2B, where the buyer keeps a track of the seller, If seller defaults in making the payment of taxes, buyer will stop business from that particular seller. In case of exports, there is a track through customs for goods. There is a track for RBI for inward remittance of foreign currency. Now, B2B and exports are the cases where things are taken care promptly. The major challenge comes is in case of B2C. How to control, how to track. These challenges are addressed to some extent by virtue of TCS provisions for e-commerce platform. Business is multi-bounded, business is multi-folded when the transactions happens through e-commerce. Instead of customers coming into the shop for purchase, the goods which are displayed on a website getting picked up through e-commerce platform is more and more vibrant in this generation. So for capturing this data, e-commerce, the concept of TCS was introduced, where government is getting data where the supplier who supplies the goods or services, whether returns are being filed properly. This is how the government is getting their data. In relation to TDS, where probably this government sector, may be not registered under GST or registered but limited ITC. Why limited ITC? Probably government sector, whatever services they do, either it is under reverse charge or exempted under GST. So it was a challenge where the works supplied or the contracts supplied to government is never into limelight because of non-payment of GST. Where the government, again, as a policy factor, they brought TDS provisions into picture. So that's how this TDS provisions came in, where government says that a central government, state government or state government or a local authority or government agencies or notified persons in this regard. These are the four set of people. The government said that a TDS, that is tax deducted at source, has to be done at the rate of 1%. At the rate of 1%. 1% under CGST, 1% under SGST. Total happens to be 2% in case of IGST. Where under a contract, the value of supply exceeds rupees 2.5 lakh. So the government said that all these four agencies, whenever there is a contract, contract for what? Supply of goods or services. Under a contract where this value of supply exceeds rupees 2,50,000, then they say that TDS has to be deducted at the rate of 1% plus 1%. 1% under CGST, 1% under SGST. This is what they have brought in. So what will happen here? By this concept is brought in, like your income tax 26 AS. Whenever TDS has been deducted, if I claim the benefit of this TDS, obviously the turnover should also be accepted as my income. Similar to that fashion, government wants to know based on the registered person, who is supplying the goods or services to these four sectors, who generally don't check GSTR-2A or 2B. But government wanted data of these particular set of suppliers. For that purpose, TDS was brought into picture. Value of supply shall not exclude taxes. When you calculate this rupees 2,50,000, examination 1 mark MCQ, 1 mark MCQ for examination of this value of supply. In addition to that, calculation of TDS at the rate of 2%, 1. Wait and watch for 2 marks MCQ based on this TDS provision. When I have to calculate this contract value, this value shall exclude CGST, SGST, UTAST or IGST and cess. So examination, if there was a question, you need to understand that only for the contracts where the value exceeds rupees 2,50,000, you need to apply TDS. Further, they say that TDS is not required when the goods or services are supplied from a public sector undertaking to another public sector undertaking. Like they say, if you look at this table, crisscross any of these entities making supplies to themselves, then TDS is not required. Why? Government feels that this is a laborious process. We trust the public sector undertakings. For that reason, no need to apply TDS when one public sector undertaking makes supply to another public sector undertaking or among this particular 4 entities. Now, this is another important provision. When they say no TDS can be done under section 51. Where location of supplier and place of supply, and important note, and place of supply. I have supplier, also place of supply, which is in a state or union territory, different from the state or union territory of a recipient. Now, I'll give one example to understand this particular TDS provision. I'll just insert one slide. Now, let us take example of government contract. For a moment, let us assume that there is a local authority. Who wanted to probably, I would say, do a survey of land, particular land. Assuming that this is state 1, this is state 2. Let me enlarge this so that it will be easy. Say this is state 1, this is state 2. There is a intersection where this is a portion where partially, when I travel from here, I have to travel through state 2, then again come back to state 1. There could be these kind of scenarios where when I travel from Kerala to Tamil Nadu, there will be one place which is pertaining to Tamil Nadu. I enter into Tamil Nadu, again I enter into Kerala. There's a small portion which I have to intersect because of the roads laid in that fashion. Now, assuming state 1 has given a contract to service provider, I'll say Mrs. XYZ Limited. XYZ Limited, registered person in state 2. survey done in state 2. Now, assuming that when this particular XYZ Limited has to raise a bill, they raise bill for assuming this entire portion where survey is required. This total portion is for 150 kilometers. They raise a bill for 100 kilometers, 20 kilometers, and balance 30 kilometers. 100 kilometers is in state 1, 20 kilometers in state 2, 30 kilometers in say state 1. Now, when I talk about this particular activity, remember provisions of IGST, where section 12, subsection 3, which talks about immovable property, where the provision says that any activity done in relation to repair, maintenance, construction, contract, design, etc. in relation to immovable property, my place of supply shall be place where immovable property is located. So in this scenario, since this 20 kilometers, this is in kilometers. 20 kilometers is in state 2. My service provider is also in state 2. So to give more clarity, state 2, let me call as Tamil Nadu. State 2 is Tamil Nadu. State 1 is Kerala. So here, when the supplier has to raise the bill, what he will do? For 100 kilometers, he will charge IGST. For 20 kilometers, he will charge SGST and CGST of Tamil Nadu. Again, for the balance 30 kilometers, he will charge IGST. Why IGST? Service provider is from Tamil Nadu. Place of supply is Kerala. By virtue of that, IGST will be charged. Now, when you look at this 20 kilometers, the service recipient is in state 1. Service recipient is in state 1. By virtue of this, my service recipient, who happens to be the public sector undertaking or local authority, my local authority who is registered in Kerala, can never remit SGST, CGST of Tamil Nadu. This is a concept for which they say that, for reason of that, they say that in case the place of supply, the location and place of supply is different from that of a recipient. Like example here, where is the TDS under? This is one scenario and this is one scenario where state A, my place of supply is state A, my service provider is from state A. However, recipient is from state B. By virtue of this, TDS cannot be applied under 51. Examination. Again, 2 marks MCQ can be expected from this particular computation of TDS. First, they will evaluate. First, they will test your knowledge. How value of supply is examined. By you for calculation of 2,50,000. Will you take into consideration CGST, SGST, IGST, cess or union directly? Answer is, I will not take any of the taxes. My basic value is relevant. Question number 2. When service provider or supplier and place of supply, these two are other than the state where the service recipient is located, no TDS is permissible under this particular provision. This is what you need to remember in this case. Let me see any doubts before we go further. No doubts. Thanks for the confirmation, Namrata. Now, provision which is connected with the procedural aspect, whatever TDS is deducted, that needs to be deposited by 10th of succeeding month. So for the month of April, if there is any TDS done by a public sector undertaking on or before 10th of succeeding month, we have to deposit. And a certificate will be issued in form GSTR-3B. This particular TDS, whatever TDS is deducted, this will be appearing in electronic cash ledger of supplier. I repeat, whatever TDS has been deducted, like your income tax. Students, please keep in mind, income tax, whatever TDS is deducted, my self-assessment tax, my advance tax, the way it is dealt. Similarly, in income GST, my TCS, TDS, these two will come and sit in my electronic cash ledger. I am a service provider or I'm a supplier. Then whatever TDS is deducted by my client, that will come into my electronic cash ledger. What I have to do? When I log into my GST portal, there is a window, TDS, TCS. I don't know how many of you have done bank audit. If you have done a bank audit of a public sector undertaking, of a PSU, and if your audit fees is more than rupees 2,50,000, then you would have seen that your bank, while making the payment, they would have deducted 1% CGST, 1% SGST, or 2% IGST. This would have been deducted. And this money, I have to log into my GST portal. There is a window for TDS, TCS credits received. I log in, I'll say, bank has, assuming I've raised a bill for 3 lakhs. On 3 lakh, 3,000. They say, 3 lakhs is the value you gave a bill to, say, State Bank of India. I say yes. Once I say yes and file that return, the 3,000 comes and sits in my electronic cash ledger. And wherever there is a delay in filing this particular remittance, there is a late fee applicable, rupees 100 per day, maximum for rupees 5,000. When I file my GST, GSTR-7 is a return which is filed by TDS. Today's class, I'll show you how these returns are filed and what all returns are applicable for each of these particular suppliers. TCS friends, this was covered at length by Arun Chajasan. So we will skip TCS provisions. Let me come to my topic for today, which is returns under GST. Returns under GST. Students, please open your study material. Have your study material in hand. Chapter 13, returns under GST law. My advice, students, always keep your institute material next to you when you are attending these classes. And institute, that is Board of Studies, have put in a lot of efforts to bring this particular concepts in a very simple language, and also in you can see this highlighted yellow color. The important points they have summarized in this kind of bulletins, which is easy for you for recap when you go for your examination. So this is the beauty of your institute material. And also they have summarized end of the chapter. If you see, let me just come to this one, the payment of tax. Now, end of the chapter, if you see, now they have summarized all my discussions, whatever we have discussed in these classes, in a pictorial or in a flowchart manner, which is easy for you to remember in your examination point in time. No other material is relevant before your institute material. This is the most helpful and easy reference guide for your examinations. Coming back, let's start with this topic called returns under GST law. Coverage, I'll make you to understand what all returns we file under GST. I'll also make you to understand what information goes into this return, and I'll give you some examples to understand how these practical scenarios are dealt when we file returns under GST law. Now, when we study this particular topic under returns, by this time we have completed registration chapter. We also have completed payment of taxes chapter. We have completed input tax related aspect and refund under GST, books of accounts and records under GST. These are 5 chapters or 5 topics associated, integrated with this topic called returns under GST. That means to say, all those learning what we have done, when to register, what to register, or how to register. Example, should I need to register as a regular taxpayer, or should I need to register as a composition taxable person? Should I need to register as a casual taxable person? Should I need to register as TCS operator? Like the e-commerce transactions, like this supply of food by an e-commerce aggregator. When we take example, assuming I'm a hotelier, I'm supplying this restaurant service. Should I register as a regular person and pay GST, or my e-commerce operator who supplies this particular food on my behalf, will they be registered as a taxable payer, registered under 9(1), and will they pay tax? So all the provisions connected with registration are pretty important for us to understand. Having understood that, now payment of taxes. What all taxes I would pay under forward charge, under reverse charge, and how do we examine the benefit of input tax credit availment under section 39? When you study section 16, which deals with your input tax credit, my return to be filed under section 39 for the purpose of availment of input tax credit. So when we studied this chapter called payment of taxes, I made you to understand something called electronic credit ledger. This electronic credit ledger has debit entry, credit entry. Debit happens for payment of tax. Credit happens when I avail input tax credit, or when my refund has been rejected for input tax credit. So here, payment of tax connected with availment of input tax credit is relevant when we talk about returns under GST. The next important element, refund. How my refund works connected with returns under GST. Last but not least, the data or information relevant from books of accounts for returns under GST. I take a few more minutes to explain in detail this particular topic. Let me just insert one more slide. Now, please keep in mind, just a minute, students. There is something called a tax evasion, which I would call as an intentional. Similarly, there is a tax escape, which is unintentional. Under self-assessment, students, I'm not going only into the returns topic. I'm giving you the backdrop. What is that we need to understand? Why is that we need to understand? The connected provisions which all will come into play when you deal with particular GST case. Post qualification, when you have to attend to a show cause notice, when you have to read a particular GST demand, how all these aspects are going to come as a tool for you to help the assessing. Tax evasion, which is called intentional, we call a technical term as mens rea, where we have a intent to evade payment of tax. Tax escape unintentional, which is not guilty. I would say this has occurred maybe because of a clerical error. Now, when I talk about this, there is something called penal provisions, which is penalty. In case of tax evasion, my penalty is 100%. In case of unintentional, my tax evasion penalty is 10%. When a show cause notice is issued, 73 is a section for unintentional mistakes. 74 is a section which is in relation to evasion, which is on account of fraud, willful suppression, or willful misstatement. These are the reasons where my penalty provisions are applicable. Now, when we talk about these aspects, my books of accounts read with returns. This will help us to prove whether there is a intent to evade or unintentional error. This is one particular provision which will help you when GST audit is conducted, when notice is issued under 73 or 74. That means to say, when a data is available in books of accounts, when a data is fed into GST returns, then we say this is unintentional. When data is missing in my books of accounts, when data was not furnished willfully, then these two aspects I call as a intentional to evade payment of tax. All these are the connected aspects. So when you talk about books of accounts, like I'll give an example, books of accounts, assuming there is a inward supply, of, say, paint boxes for 100 cans. Accounting is done only for 80 cans. Assuming that there is no offer. Now, what happened here? Supplier supplied 100 cans, but he billed only for 80 cans. I also know that I have received 100 cans. I have accounted only 80 cans. What happened to the balance 20 can? This 20 can has not been accounted for. Why? They wanted to sell as an unaccounted transaction. This tax evasion, intent to evade payment of tax, comes into picture. Now, these are the connected provisions where we study something called returns. Based on this returns file, assessment takes place. Assessment, where they say scrutiny of returns file. Where they say, you as a registered person, you have an intent to evade, intent not to evade. I'll give one more example. Say, ITC. When you talk about ITC, form GSTR-3B, books of accounts, written under section 39. Now, ITC, let me say, month 1. We are talking about input tax credit. Month. In month 1, my form GSTR-3B shows 100 rupees. Books of accounts, I have accounted for 80 rupees. My return, I have updated for 100 rupees. Month 2. My form to be shows 120. In books of accounts, I have accounted 100 rupees for month 1 plus 20 rupees, 100 rupees pertaining to month 2 and 20 rupees pertaining to month 1. Total 120 I have accounted. Out of 120, I have accounted 100 rupees. This gap of 20, whatever is there in month 1, I have accounted here. While filing GSTR return, what I have done, 120 available as per books, along with extra 20 what is available. Say 140 I have availed in GSTR 9. Now, when a GST audit happens, they will say, what is the input tax credit you have accounted under section 16? What is the input tax available in form GSTR-3B? What is the input tax availed in under section 39? Now, in case if there is any mismatch, should this tax be demanded under section 73 or under section 74? This is how the assessment is going to take place. So with this background, students, when we read this chapter under returns, please keep in mind, somewhere when Arun sir is going to cover assessment provisions, the aspect connected with GST returns and registration, input tax credit, your books of accounts are connected. Then moving further, statements filed under various provisions differ vis-a-vis returns stipulated. Now when I say statement, there is a statement called GSTR-1. There is a return called GSTR-3B. In today's class, I'll explain you this one connected provision, Rule 88C, where there's a gap between my GSTR-1 and gap between GSTR-3B. How this particular gap is assessed when the GST officer looks at, look, when you file your GSTR-1, you declared 120. When you file your GSTR-3B, you declared only 50 rupees. So your output tax is higher in GSTR-1, lesser in GSTR-3B. Why I have done that? To get my payment from my customer, I uploaded entire 120. Because I don't have sufficient cash, I short paid my tax. Then provisions of Rule 88C comes into picture. This is a new rule which was brought in 2023. So examination, wait and watch for one question connected with Rule 88C. Now, while filing GST returns, I'll make you to understand what all information we have to fill from the books of accounts and how the GST officer is going to scrutinize this particular information. Another important aspect, revision of returns. Like your income tax return, once you file your IT return, you have a provision to rectify your return. But in GST law, there is no mechanism to rectify your revision. However, rectification of any error or omission in subsequent returns is permissible. I repeat, I cannot revise a return, but I can rectify the error or omission in subsequent returns. Like example, say month 1, month 2, month 3, month 4. Month 1, my turnover is 100, but actually I reported for 80. Month 2, my turnover is 60, I have reported for 60. Month 3, my turnover is 75, I reported for 75. Month 4, I have realized that when I am doing a scrutiny, instead of 100 rupees, erroneously I have reported only 80 rupees. So the gap of 20, I can rectify in month 4. My actual turnover for month 4 is assuming to be 60 rupees. I can report 80 rupees, the gap which was there in my month number 4. Similarly, if I paid any excess tax, I can offset this excess tax or I can pay lesser tax in any of subsequent months. This is where provisions of rectification is possible in a return. Non-filing of returns, in case if I don't file returns or any statement, late fee under section 47 is something which we are going to study today. Under section 47, late fee has to be computed. These are the basic aspects which are connected with our returns related provision. I'll come to our institute material. These are the various returns which we are going to study today. Page number 13.3. Come to page number 13.3. Section 37, which is a statement. Section 37, I call as GSTR-1. Statement for outward supplies. Section 38, this is omitted retrospectively from July 2017. Section 39, we filed something called GSTR-3B. Most of you in the process of your internship, you would have come across GSTR-1 and GSTR-3B. Then moving further, Section 40, first written, though they are mentioned, we are not filing any of this. Section 41, again, this is just there as a passing provisions under Section 16, only for the purpose of availing input tax credit on provisional basis. We avail input tax credit on provisional basis. Only for that limited purpose, we study Section 41. Section 44, which deals with your Form GSTR-9 annual return. Most of you who have done GST audit would have come across this particular form called GSTR-9 and a reconciliation statement called GSTR-9C. GSTR-9 is mandatory where the aggregate turnover exceeds 2 crore. And 9C is mandatory when the aggregate turnover exceeds 5 crore. These are the provisions right from 2017-18 which are there as on today. Section 45, which deals your final return, this is a provision connected with Section 18 where I reverse my input tax credit when I cancel or surrender my registration. Why do I file this return? For the purpose of payment of tax, that is input tax credit on your closing stock. Then Section 46, notice to return defaulters. The job of the jurisdictional GST officer, wherever you have taken a registration, but you have not been filing your returns in timely manner. There, scrutiny of those returns or sending notice to the defaulters is carried out under 46. Levy of late fee is covered under 47. Then, provisions connected with GST practitioners. 150 and 123. 150 is your miscellaneous provision. There is another chapter where we study the miscellaneous provisions, where this obligation to furnish information return. When I talk about this information return, there is something called tax ascertainment. Tax ascertainment is undertaken using this particular obligation to furnish information return. I give little background on Section 150, how this will be used by the proper officer under GST. Most of you would have heard something, someone called enforcement officer, or I would say intelligence. This we have a name under state GST. This is a name we have under central GST. This enforcement or intelligence are the officers who are called proper officers, where they are on field. Most of us would have watched these movies where the spy movies, like the army or navy, the patriotic movies. The army or navy, they will send their soldiers in a disguise to another state for the purpose of protecting the nation. Similarly, under GST also, we have this enforcement and intelligence team who will be on the field to get the relevant information. When I deal with this miscellaneous chapter provisions, I'll give you more insight how these miscellaneous provisions are relevant. As of today, Section 150, when you read, the proper officer under GST can call for records from any other authority who maintains books of accounts or who collects the statistics. For a moment, I'm a factory. I obtain a factory license from the Pollution Control Board. I file some returns with labor inspector. Now, when I file information with labor inspector, Rahim asked one question. So when there is a unregistered supplier for 1 lakh, should I need to pay tax under reverse charge? For a moment, as on today, under reverse charge, section 9, subsection 3, security contract, security manpower supply, there is a reverse charge applicability, subject to some conditions. So here, the GST officer will go for the labor inspector, where he'll say, look, give me the returns filed by this particular manufacturer, where how many employees have been employed on contract basis in this particular company. Assuming for a moment, like fake invoicing, I get every month the security bill for 100, say 25 security labor. As per my declaration to the labor inspector, I say only 3 security manpower are deployed. Now, what is happening here? The information furnished to the labor department vis-a-vis the information available in your purchase bill. When the GST officer compares these two, he will come to ascertainment whether there's an intent to evade payment of tax or the tax which was availed is a genuine tax. So for that purpose, this we use provisions connected with section 150. In this regard, any return which is called for, if not given, information is given, penalty will be levied under 123. Section 41, we have already studied in your input tax credit module. We will not dwell in detail in 41. These definitions we have already covered in registration and books of accounts related aspects, tax invoice related aspects. Input service distributor. We will just focus on this definition called input service distributor, ISD. ISD. Office of the supplier of goods and services or both which receive tax invoice, and issued under section 31 towards receipt of input service and issues a prescribed document for the purpose of distribution of credit of CGST, SGST, IGST or UGST paid on said services to a supplier of taxable goods and services or both having PAN as that of the said office. So here, service provider who gives a service to a company, this company has presence in state 1, state 2, state 3, state 4. Now here, assuming state 1 is my head office. At head office, I take a registration called ISD. What I will do? All these services provided by service provider, which are common services. What are the examples of common services? Say advertisement, statutory audit, right? Advertisement, statutory audit. What else could be there? It's a banking service. Say company avails a particular term loan where they have to execute a particular security and some charges are levied on that. When I have these common services using ISD, the distribution happens to state 1, state 2, state 3, state 4. So I take a separate registration called ISD. So GSTR-6 is a return filed by ISD. So in case of HO, that is state 1, I have regular registration. I have ISD registration. So when you register under GST, you file an application for regular return, for regular registration. You file one more application for obtaining a ISD registration. So please keep in mind, students, whenever we talk about ISD provisions, any entity registers themselves as ISD. In a particular state, I would have ISD registration separately, regular registration separately. So I have to file monthly ISD return, monthly regular GST returns. This is connected provision with ISD. NRTp, non-resident taxable person. Non-resident taxable person. NRTp means any person who occasionally undertakes transactions involving supply of goods or services of both, whether as a principal or agent or in any other capacity, but who has no fixed place of business or residence in India. I'll give an example. Say there is a machinery purchased by, or I'll say imported by ABC Limited in Gujarat. So this machinery is worth 50 crores, where installation takes 6 months, testing takes 3 months, then commercial production. Now, assuming that this machinery has been imported from Germany, So this ABC Limited, assuming that they have taken support of Mr. A, who is an expert on operating this machinery. This particular company, they say that Mr. A, please visit India right from installation and till commencement of your testing. So 6 months, Mr. A is going to visit India for the purpose of supporting this entity called ABC Limited. So here what happens? When A visits India, he'll say, my professional charges are so and so per month. Assuming per month, he charges US dollar $20,000. Germany, let's say pound. Okay, let's say dollar. $20,000 per month. Now, when this is going to be the professional services, this A is called as NRTp. The person who occasionally undertakes a transaction which involves supply of service for what? Who has no fixed place of business or residence in India. Because he is supplying a service in India, he would be called as NRTp. Then he would take a separate registration called NRTp. This particular A, when he visits India, he can import goods along with him. When he imports goods, he pay customs duty. Plus IGST. This IGST can be availed as ITC, for giving services to this particular entity. These are the basic provisions connected with my NRTp. Let me see any doubts before we go further. Namrata is asking a question connected with TDS provision. So no TDS if recipient is in different state. What is the logic for this? Namrata, I have given this particular example. Let me just come to the respective slide. Let me present this slide. Before this, I gave this example of state 1, state 2. Yes. Now, I give example this way, Namrata. Look at this particular transaction, state A, where my service provider, location of supplier is in state A. Place of supply is also state A. Now, what will happen here? this supplier who's in state A and also the place of supply which is in state A, he will charge SGST, CGST of that particular state. Now, where is the recipient? The local authority for a moment is in state B. Sitting in state B, he cannot recover something called TDS of this. Like example, service provider, place of supply, service recipient. Service provider is in Gujarat. Place of supply is Gujarat. Service recipient is in, say, Delhi. Why place of supply is Gujarat? Please recollect your section 12, subsection 3, IGST provisions, where I have done a service in relation to immobile property. I, being a service provider, I am from Gujarat. Also, I gave a service in relation to immobile property where place of supply is Gujarat. So I'll charge SGST, CGST, Gujarat. My service recipient who is there in Delhi, he can never recover TDS under this provision. This is example. Now, example, what is the nature of service? Let's take example of hotel accommodation. Assuming that a local authority of Delhi have conducted a conference in Gujarat. I have taken on rent a particular convention hall where 5 lakhs was the amount paid. Now, the service provider will charge SGST, CGST of Gujarat. Sitting in Delhi, I can never recover that SGST, CGST. That is the logic why if a service recipient is in another state, TDS provisions are not applicable. Hope this is clear, Namrata. If service provider is unregistered, then not applicable. Yes, ma'am. Only when the services are taxable, when the goods are taxable, where tax is levied, the TDS provisions are applicable. Exempted goods supplied or any unregistered person supplies, no TDS provisions get triggered. Namrata is asking this question. I think Rule 88B you're asking, Namrata. The month in which my closing balance comes below my wrong availment, from that month till the day you pay that availment, interest is calculated. I repeat, month 1, month 2, month 3. I have taken a wrong credit in month 1. This wrong credit, if I look at closing balance of month 1, my closing balance is higher, not avail. Month 2, my closing balance is higher than the wrong availment, no interest. Month 3, my closing balance is less than wrong availment. Then my utilization happened in month 3. My interest starts from month 3 till the month you don't pay that particular wrong availment. This is how I calculate my interest. Hope I'm clear, Namrata. Reverse charge, we have discussed. Register person, we have discussed. Return, we are going to study in today's chapter. Supplier, we are clear. Tax period. Tax period means page number 13.8, period for which return is required to be furnished. Taxable person, this is important. Taxable person who is registered or liable to be registered. Registered, already obtained registration under section 22. Liable to be registered by virtue of provisions of section 24, ought to be registered but not registered. Then I call them as a taxable person. Taxable supply. Supply of goods or services on both which tax is leviable under section 9, subsection 1 or 9.3 or 9.4. Valid return furnished under 39.1 on which self-assessed tax has been paid in full. OIDR, this is covered in detail in your provisions connected with IGST. place of supply, I'll skip that. Zero rated, discussed in your input tax credit chapter, we'll skip that. First is your written under section 37. Written under section 37. Furnishing details of outward supplies under 37. Now, I'll give you the backdrop of section 37. Then we'll come back to 38. Overview of my returns under GST law. The various returns which we are supposed to file is one is ISD return, TDS, TCS, final return at the time of cancellation of my registration, NRTp, what we have discussed just now, composition under section 10, casual taxable person similar to your NRTp, other periodical returns. This is the overview where all returns under GST law are touched upon. ISD for distribution of credit. Now, students, this one slide is good enough. One slide is good enough where when you take the activity of filing of monthly returns, when you take the engagement of monthly support for complaints for any of your client, you have to examine what is the nature of business of the assessee, what all returns are ought to be filed, and what returns are actually being filed. ISD comes into picture. ISD comes into picture where distribution of credit has to be undertaken. I have explained this ISD provision where if there are common credits, please remember your accounting chapter where we have this departmental accounting. Provisions connected with departmental accounting where I have common credits which I need to distribute. We have to take a registration at the ISD. I draw your attention to 51st GST Council meeting. 51st GST Council meeting, where it has been made mandatory. It has been made mandatory to register under ISD. It is made mandatory to register under ISD. Why? Wherever you are ought to distribute your input tax credit, but you are not distributing this particular input tax credit, then they say that my distribution of input tax credit cannot be done on a tax invoice. Rather, that has to be done using ISD. I'll explain this concept once again. Entity XYZ Limited. XYZ Limited. This entity XYZ Limited have registered themselves in state 1, state 2, state 3, state 4, state 5. State 1 happens to be the head office. Now, let us examine the input tax credit, which is common at entity level. I gave example of one is advertisement. Second is your statutory audit. Third is in relation to banking services. Now, assuming that the input tax credit on account of advertisement, all this put together, tantamount to say 30 lakhs for the entire financial year. Now, each state assuming equal turnover, 30 divided by 5, 6 lakhs by 5, 6 lakhs per state. Now, till October 2023, ITC cross charge using a tax invoice. That means to say, state 1 bill to state 2, state 3, state 4, state 5. what used to happen is that state 1 used to avail 100% input tax credit. And this particular input tax credit used to be distributed to the rest all states using a tax invoice. Now, 50th GST Council meeting, 50th GST Council meeting have said that the ITC can be, this common ITC can be passed on, can be cross-charged. Students, please keep in mind, when I say cross-charge, this is nothing but tax invoice. However, after 51st GST Council meeting, 51st GST Council meeting, which occurred in October 2023, they have said that nothing doing. In this GST Council meeting, they have said that ISD is compulsory, is mandatory for ITC distribution. So by virtue of this, please keep in mind the provisions connected with ISD, section 20, where I register myself under ISD for the purpose of distribution and a formula prescribed thereof. This is a provision which we need to study. Students, we are at 7:31. Let's have a break for 10 minutes and we will resume back at 7:41. Let's continue with our discussion. There's one question from Namrata. Sir, if wrong availment is equal to the closing balance, then if it is equal to the closing balance, Namrata, I have not utilized. I have availed, but not utilized my section 50, subsection 3 or rule 88B very clearly says that only if your balance, closing balance, is less than the wrong availment, it is assumed that I have used. If my wrong availment is 20 rupees and my closing balance is 20 rupees, I'm not utilized. My wrong availment is 20 rupees. My closing balance is 16 rupees, 16. Then 4 rupees has been utilized. On that 4 rupees, I have to pay interest till the day I reverse. This is the answer, Namrata. Coming back, students. ISD, I have explained. Then the concept of TDS TCS, we have discussed at length what is the purpose of TDS TCS as a policy matter for administration. Most of you, post-qualification, startups are looking for youngsters like you for assisting them on TCS e-commerce related provisions. Very, very important and very complicated provisions. Take it from me. Most of you post-qualification, once you join industry, along with your expertise on the professional subject of costing, accounting, taxation, law, you also need to have this technical expertise, especially for TCS related provisions. For the reason how accounting architecture should be, how the TCS under income tax, how the TCS under GST has to be applied, or how the TDS under income tax, TCS under GST has to be applied. And for an e-commerce operator, I don't know how many of you remember this example. I am an e-commerce aggregator. I, as an e-commerce aggregator, I myself can give services to a supplier. Assuming for a moment, say Viraj is operating a restaurant. He supplies the food using my e-commerce platform. Whatever supplied from by Viraj, I as an e-commerce operator under 52, I recover TCS. And also I tell to Viraj, look Viraj, now whenever customer gets onto my e-commerce platform, they have to find your name in the top 5 search list. So what I'll do, I'll give a advertisement opportunity. Anything they search, first and foremost, your name come. Now in the search engine, you are there in the top 5 list. And also, when they browse through, all incentives or this offers pertaining to your outlet will be visible. So I charge you some 10% or say some 5,000 per month. That's called regular supply. So which return I have to use for charging GST as a regular person? Which return I have to use or the data I have to collect as TCS? Accounting. Say I have collected 50,000 on behalf of Viraj. While making the payment to Viraj, already I have to bill 10,000 for advertisement. I have to net off these two and I have to pay him only 40,000. Now, this is only a theoretical example. Practically, when operations come into picture, my dear students, it's going to be a lot of time. So here, my advice would be have flair to SAP or ERP or any of this technological platform along with your CA curriculum to get an extra edge once you come into the industry. Final return, as I said, this is connected with section 18, where on your closing stock, what all taxes ought to be paid, you will pay. NRTp, we have discussed. Composition, already discussed under section 10. Casual taxable person, we have discussed when we dealt with provisions of section 22, where a businessman conducts a business on a casual basis. Other than these returns is your annual return or form GSTR-3B, GSTR-9. Those are other returns prescribed. So this is how overall gamut of returns comes into picture. Along with this, students, books of accounts is something which you need to keep in mind, which you need to study. Now, some of the examples before we get into the actual returns. Goods supplied by Mrs. LLP and Co. were returned by the customer by issuing a tax invoice. How does the same to be disclosed by the supplier and recipient? LLP sold the goods to their customer. This particular goods supplied by LLP were returned by the customer by issuing a tax invoice. Now, these goods are returned by virtue of a tax invoice. How does the same to be disclosed? Instead of issuing a credit note under GST, the customer has issued a tax invoice. So, this becomes a outward supply for customer and becomes an inward supply for LLP. So, how do they disclose in the GSTR-1, GSTR-3B? EABC Limited applied for registration during Jan 2020. However, registration was granted on February 20, valid from the date of application. Should the returns to be filed for January or February? Answer would be, since the registration has been granted in February, no returns will be filed for January. Only returns will be filed from February onwards, and all revised tax invoice as per section 31, as per returns provisions of 31, would be disclosed in the return of February. PQR & Co. have registered office in Bangalore and branch in Chennai, Tamil Nadu. What are the compliances under GST if registration is sought only at branch? So they are saying that the register office is in Karnataka and the branch is there in Tamil Nadu. Registration is sought only at the branch at, say, Tamil Nadu. So if Tamil Nadu is registered, Karnataka is not registered, what happens? Now, ISD is one aspect we have discussed. So you have to guide them. Look, various returns available under GST are like this. So you have to examine on the basis of your business model whether CTP is required, whether ISD is required, or regular returns are required. This I'll skip. Credit note we have discussed at length. Input tax credit availed partially by block credits formula erroneously. This question number 5 is a practical question. Input tax credit availed partially by applying block credits formula erroneously. Subsequently, registered person would like to avail the balance credit. Now, this is little complicated. When I deal with GSTR-3B, I'll explain this particular aspect. Input tax pertaining to common credits, this I have discussed. Various returns relevant for you to examine. GSTR-1, outward supply. GSTR-2, not there in picture. This has been omitted wide ab initio from July 2017 onwards. GSTR-3B is a monthly return. All of you are aware of this. There's one monthly quarterly return called QRMP. The GSTR-4 is your quarterly composition return under section 10. Rule GSTR-5 for NRTp. GSTR-6 for your ISD. GSTR-7 for the purpose of TDS. GSTR-8 for the purpose of TCS. GSTR-9 for the purpose of annual return. Finally, GSTR-10. These are the total returns which are there in our institute material for us to study. Starting with GSTR-1, details of outward supply. This details of outward supply, why it is relevant? Answer would be for input tax credit availability to B2B transaction. Second, for disclosure of all supplies. Third, information for outward supply. Fourth, provisions of time of supply under section 12 under section 13. Now, please remember this first slide I have spoken to you. I talked to you on registration. I talked to you on time of supply. I explain you in relation to input tax credit. Also, I'll explain you the documents relevant under GST. Today's session and the next session, it is more like a recap for all of us. to understand all connected provisions when we study particular return. This provision of GSTR-1 is specified under Section 37, read with Rule 59. This is not applicable for ISD because GSTR-6 takes care of ISD. NRTp, GSTR-5, already there is a written. So for him, there is no GSTR-1 requirement. Section 10, composition, they file GSTR-8, so they are not required to, they don't give any input tax credit to registered person. They're not supposed to collect tax. So composition fellow also need not file GSTR-1. TDS, TCS, it's a policy matter only for some data they wanted to collect. OIDAR, this is connected with e-commerce transactions, connected with internet related supply. So here, this is also not required to file GSTR. If you look at overall persons who register under GST, So here, whom they have left out, CTP, they have left out. Regular registration, they have left out. That's all. CTP and regular. So ISD, NRTP, composition, TDS, OIDR. All these people are exempted from GSTR. The people who file this return is one CTP, who have to give a benefit of input tax credit, and the regular registered person, they need to file Form GSTR-1. What I will do, I will open this respective GSTR-1 quickly for your understanding purpose. The more, theory is always theory, students. It is there in your institute material. I will make an attempt, to show you some practical aspects which are relevant, which you would have noticed or you would not have noticed in your articleship point in time. Hope this form is visible to all of you. Let me increase the size a little bit. Yeah. This is my form GSTR-1. Form GSTR-1. Details of GST number, legal name, everything is auto-populated. When I file my GST return, my acknowledgement number, this is ARN acknowledgement number, the date when I file my GSTR-1 will be shown in this particular table number 3. Table number 4. Table number 4 talks about outward supply, which is taxable, made to registered person, including UIN, Unified Identification Number, your World Health Organization, or UNESCO, or UNO, etc. Other than supplies covered under table number 6. So table number 4 precisely talks about all B2B transactions, where supplies other than attracting reverse charge, supplies other than attracting reverse charge, supplies attracting tax on reverse charge, then GST supplies through e-commerce. So here, other than reverse charge, 4A, supplies other than those attracting reverse charge, including supplies made through e-commerce operator, attracting TCS. So here they are saying that on my outward supply made to a registered person, including those supplies which are made through e-commerce operator, I'll show in table number 4A. I show my customer GST number. I'll show my invoice details, rate of tax, taxable amount, respective IGST, CGST, SGST, and place of supply. Based on this information, this will travel to Form 2B, Form GSTR-2B, Form GSTR-2B. Now, this is a basis for availment of input tax credit, right? Then supplies attracting tax on reverse charge. Now, and we will take example of say GTA. As a GTA, I'm registered under GST. I have opted to charge 5% where the tax needs to be paid on RCM. So I disclose that as VRL or as SRS travels. I'll say so much of supplies I have done where my recipient, my customer, the whatever GST number I have given here, they have to pay tax under reverse charge. Then GSTN of e-commerce operator, all those supplies made through my e-commerce operator GSTN, I have to specify here. The previous session, which we have discussed on e-commerce transactions, you would come across these transactions. Now, there is a specific requirement that any interstate supply which is made to an unregistered person and whose invoice value is more than 2.5 lakh. B2C supplies where the value is more than 2.5 lakh. B2C, unregistered person, interstate. Unregistered person, interstate, which we call as a B2C. If the value is more than 2.5 lakhs, I need to mention invoice-wise and state-wise. That is your place of supply specific. Under income tax, you have some provisions connected. Don't collect cash more than 10,000. Don't bill. Don't collect cash from a customer more than 20. When I make a cash payment, I should not exceed 10,000. Similarly, a seller who collects cash not more than 2 lakhs, he can collect cash. This is how some conditions are there and under income tax. Similarly, in GST, for statistics purpose, they wanted to know invoice-wise what all B2C supplies are there on which the value of supply is more than 2.5 lakh, which is in relation to interstate. Then, table number 6, which is little important, zero rated supply and deemed exports. Zero rated supply and deemed exports. This includes your exports, your SCZ, and your EOU transactions. So exports, I'll give my shipping bill, the port code details. SCZ, nothing is required, just authorization is required. Authorization from the officer. From the SCZ officer, authorization required. Now, please keep in mind, Section 16 of IGST Act, with effect from October 2023, this amendment came into picture. Deemed exports, all that EPCG license, supplies against EPCG or to EOU or DIF. In customs, when I deal with DIFA, I'll explain these provisions of EOU or duty import free authorization, etc. Table 6 talks about those transactions in relation to exemption under Section 16. Next. Table 7 talks about all B2C supplies unregistered person other than those covered in table number 5. Table 5, B2C supply more than 2.5 lakh, which is interstate supply, So here, what I will do, all my B2C transactions other than this table number 5, I'll show here. So I could have interstate supply, I could have intrastate supply. Interstate supply, state specific, I have to specify, I have to mention here. One important aspect here, net of debit note, credit note. So in a particular month, if I have outward supply, if I have credit notes, if I have debit notes, now all this I have to net, and that net figure is what I have to report in this table number 7. Now, when you look at this information, probably you might be thinking, so this is just a written, what is that we have to learn from here? My intention to discuss this with you is, please visualize, when you extract data from Tally, when you extract data from SAP or ERP, is this information available in your accounting software? How the data would be captured when the sales get posted at the initial or inception stage? Do I capture this information? This is how you have to visualize your knowledge for learning these particular returns. Table number 8. Now, this is important data. Now, this is important for the purpose of Section 2, Clause 6, which deals with your annual turnover, You remember, for Section 22, for registration purpose, Section 22, which dealt with registration, I need you to calculate annual turnover under Section 2, Clause 6. For the purpose of section 2 clause 6, I also made you to study section 2 clause 47, which deals with exempted supply. So here they're asking about nil rated supply, exempted supply, non-GST supply. Non-GST supply is your schedule 3 transactions. Schedule 3 transactions. Now, why is that I'm saying table number 8 is important? For the simple reason, when you look at your profit and loss account, all aspects which have come on the credit side of P&L should eventually travel to GSTR-1 in any of the tables. Now, some information, like example, when I talk about this credit side to P&L, say insurance claim, bad debts recovery. Now, there are some transactions where I don't know where I have to disclose, or say duty drawback. I'll write here, duty drawback. Now, when you look at your profit and loss account, either in direct income or indirect income, some information is there. That data which you don't know where to fill, come into this table number 8, use this nil rated or exempted where actually it is nil rated or exempted. Other than this, park rest all data in non-GST supply. So what will happen if I fill this data? Please remember section 73, where there is no intent for tax evasion. That means to say, whatever data is available in my books of accounts, I have I have shown this data in my GST returns. This GST returns is the data which is available to the proper officer for assessment. So we are making our ground very clear that I will not leave an officer to come into a conclusion that there is an intention to evade payment of tax. For that reason, all your miscellaneous income which is there in your P&L, please use this table number 8 for the purpose of disclosure. Then table number 9. Table number 9 is, as I said, amendment is not possible. Revision of return is not possible. So I do amendments to the taxable supplies. Since revision of return or statement is not permitted or not permissible, all amendments are permitted in the subsequent returns or any of the return. So any of the data which is pertaining to B2B, which is pertaining to unregistered person B2C, which is pertaining to your zero rated supply. All this information, I can make an amendment in this particular table number 9. Then moving forward, table number 10, supplies in relation to B2C. All B2C other than your more than 2.5 lakh. Whatever corrections I have to do, I can do it over here. So generally, what set of amendments come here? Like example, B2C. I have declared a particular supply as interstate. I have declared as an interstate. I can change this as intra-state. So when I go for amendment, what happens is here, select tax period. So here they'll ask, which of your previous tax periods you have done a mistake? Assuming I have done a mistake in April. In the month of September, when I realized that I did a mistake, I'll go in, I'll open April return in September, I'll select interstate, I'll make it to 0. Again, I'll make an entry for intrastate. This is how correction is done in my table number 10. Moving further, table number 11. Now, this is the most important aspect where reconciliation is dealt, where you as a chartered accountant is sought for reconciliation. Consolidated statement of advance received, advance adjusted in the current tax period, amendment of information in relation to earlier tax period, net of refund voucher if any. I show the advances received. I make amendment of advances pertaining to the previous period. I also make adjustment of tax advances. So month 1, I received advance, show here. Month 3, I raised a tax invoice. Then show this as a adjustment in this particular table. Or month 5, I need to make an amendment. Then make an amendment in this particular table. All aspects connected with your advance. Section 13, which deals with your time of supply for services. Please keep in mind, students, when you join a particular company or when you give your services as a consultant to any particular company, goods or services where I receive advance in relation to services, using table number 11, I disclose my services. Please keep in mind, advance received until and unless the service is not completed, don't issue tax invoice. Raise a receipt voucher, disclose in table number 11. Client will ask, sir, I paid including GST, where are you showing? Sir, in table 11, I've showed, I've used something called receipt voucher. Please take this receipt voucher. Next, another important aspect, table number 12. Table number 12, you remember section 35, when I dealt with your accounting records, I have explained you something called inventory records. So here, my HSN description, unique quantity code, total quantity, rate of tax, taxable value. All the information right from table 4 till table number 11, excluding table number 8. Whatever output tax on that, whatever turnover along with output tax you have calculated, this summary should come here. That summary should come here. Sir, is it applicable only for goods? I would say this is applicable for goods and services. It's applicable for goods and services. So in a particular month, whatever sales data we have taken, that summary has to be filled mandatorily in this particular table. This is the importance of table number 12. Moving further, table number 13. Now, this table number 13 draws its importance right from Rule 46 to Rule 55A, which deals with tax invoice, debit note, credit note, delivery challan, receipt voucher, refund voucher, advance voucher, payment voucher. Now, these are the various documents we have discussed. Section 35, which deals with your books of accounts, read with Rule 46 to Rule number 55A. So that details, look, invoice for outward supply, invoice for inward supply. This is your self-tax invoice, revised invoice after registration, debit note, credit note, section 34, receipt voucher, payment voucher, rule number 56. Sorry, rule number 55. Refund voucher 55, delivery challan, rule number 55. All these are the aspects which are dealt in a particular month have to be disclosed in this particular table. Now, disclosure in this table will help you saying that books of accounts are properly maintained. Books of accounts are properly maintained. Now, while doing an audit of any particular assessee, the first and foremost what you can do is pick any return of assessee. Just open this table number 13. If you read this table number 13, what all documents were issued, that gives a clarity to what level books of accounts have been maintained by this particular assessee. Then table number 14, details of supplies made through e-commerce operator. Supplies made through e-commerce operator on which e-commerce operator are liable to collect tax under 52. So here I give an example of Viraj. When Viraj makes a supply through my common portal, Viraj comes and fills the data here. Viraj will mention my GST number, the value of supplies he made through me, and the respective tax of IGST, CGST, AGST, cess. So these are the relevant data which travel for the purpose of reconciliation when returns are filed under section 37. Then amendment to table 14. Details of supply made through e-commerce operator on which e-commerce operator is liable to pay tax under 95. E-commerce operator to report. Table number 14 will be done by supplier. Table number 14 will be done by supplier. Table number 15 will be done by e-commerce operator. Like example, when Viraj does the supplies through Swiggy or Zomato, Swiggy or Zomato will fill the data in table number 15. However, Viraj will supply the data in table number 14. Please keep in mind, life is full of reconciliations. GST, life is full of reconciliations. Now, if you want to do business, you have to honor the tax laws. If you want to honor the tax laws, you have to read the tax provisions. Only when you read the tax provisions, you will be given importance in the business commerce. If you feel things are complicated, who will study all this? Please keep in mind, there's a next person standing next to you. Sir, please give me a way. I'll take over your charge. So please keep in mind, whatever you're going to study here, it is just a beginning that the data which is getting captured has to be understood, analyzed, and presented in a meaningful format, whatever we have studied all together. B2C supplies, all these amendments to e-commerce made by e-commerce operators. Registered supply is made through e-commerce operator, which is for registered people, and other than registered people, that is B2C transactions. Finally, just a declaration which is to be done in your GSTR-1. Now, GSTR-1, when you examine this filing of return, I can file on monthly basis or I can file on quarterly basis. Any person whose aggregate turnover is less than 5 crore can opt for quarterly return. So person who is opting for quarterly return for month 1 and month 2, instead of GSTR-1, he files something called invoice furnishing facility. Invoice furnishing facility. Usually GSTR-1 monthly filing on or before 11th of subsequent month. This has to be filed. In case of a quarterly filing return, only for B2B transaction, IFF is used for filing. And the due date is 13th of subsequent month. And in month 3, instead of IFF, the regular GSTR-1 is filed and the regular due date of 11th is applicable for month 3. And GSTR-1 is not permitted if GSTR-1 is not filed for preceding 2 months. And in case of quarterly return, if 3B is not filed for the previous tax period, they will not allow this IFF facility to be filed. Let me see any doubts before we go further. Namrata is asking this question, continuation to 50 subsection 3. Namrata, you are not coming out of 50 subsection 3. आप वही के वहीं पे बैठे हो. Namrata is asking if how to calculate if wrong availment is equal to the closing balance, then it means that okay, if my wrong availment is as good as is matching with my closing balance, indication that I am never enjoyed. If my wrong availment is more than closing balance, I have availed, and that I have to pay interest. Then Namrata is asking this question, can we show one principal place of business for 2 persons as they have different business? Answer is no. For one premises, 2 people undertaking business is not permissible, Namrata. You should have a separate, like, I don't know how many of you have read excise, central excise provisions. We call bonded premises. Wherever, whatever registration you have taken, that particular premises is called bonded premises. I understand, Namrata. No worries, ma. No worries. My job is to bring a comfort till you understand. I just, on a lighter note, I've said, whatever doubts you have, please feel free. I'm there to clarify. So here, in case if, let's take example, say premises number, door number three. It's a 100 by 100 square feet premises. Let's assume that Namrata along with Viraj, they both have taken this particular premises for undertaking business. Namrata is into consultation business. Viraj is into trading activity. Now, Namrata, she purchases capital goods like laptop, air conditioner, furniture. Now, Viraj, for trading purpose, he purchases some stock. Now, when an officer comes for inspection, Namrata, whose capital goods, whose trading items is belonging to whom? Both Namrata and Viraj are in premises called door number 3. When I go into door number 3, there is no demarcation, there is no wall. Entire open space, on north side Namrata is sitting, on south side Viraj is sitting. There is no partition. As long as there is no partition, I would say one premises used by two people is not permissible under GST. So what if I have a demarcation? I'm okay with it. I don't have any issue with that. Hope I have cleared, Namrata. Yes, Namrata, I forgot to upload this notes, ma. I'll do it end of this session. Whatever material we are discussing, I'll upload this. Then Chirag is asking this question, sir, invoice-wise details required in table number 7. Viraj, this, okay, I'll just come back to explain this. See, before table 7, we need to understand table number 5. Table number 5, this is a policy matter where any value exceeding 2.5 lakh. That too, it's a B2C transaction. So government is interested on this particular transaction. Why is that you are making a B2C, that too interstate, more than 2.5 lakh? So they wanted this invoice-wise information for their audit point of view. And when I travel to table number 7, that is a regular B2C. When I travel to table number 7, that is regular B2C. Regular B2C. That is other than table number 5. Other than table number 5. That means all this is less than 2.5 lakh. Now, as a policy matter, government is interested only to capture, government is interested to check only those transactions where it is a B2C supply more than 2.5 lakh. It is not interested with this transaction. That's why here invoice-wise data is not required. But what is it I have to do? Net transaction I have to do. Net transaction I have to do. So answer to your question, Viraj, not required. It is not required. Let me check the next question. Table number 12 is mandatory. If not given, what will be the consequence? I'm glad you asked this question, Namrata. I'm glad you have asked this question. Now, always go with a different tendency. What if I don't fill? What if I don't give? Now, there are miscellaneous provisions where you are supposed to maintain books of accounts. You are supposed to give HSN summary. Ajay, for some of you who doesn't know table number, table number 12. My table number 12 is HSN-wise summary. So this HSN-wise summary is compulsory. HSN-wise summary is compulsory. Why? I maintain books of accounts. Also, why? I issue a tax invoice where my HSN number up to 4 digits has to be mentioned. So for that reason, Namrata, when you file your GSTR-1, because you are issuing a tax invoice, because you are mentioning this particular HSN in a particular tax invoice, I would say yes, it is compulsory. Chirag is asking, sir, is table 11 not applicable for goods? Time of supply in relation to goods, advances, I need not pay tax, Chirag. So for that reason, only for services, I fill table number 11. Namrata is asking, what is IFF? Is IFF mandatory? We need to make payment while filing IFF. I'll explain this IFF, Namrata. Please repeat M3, last point. Which is at M3, Namrata? Please repeat M3, last point. I'm not able to recover. Okay. Month 3. Okay. Okay. No. Yeah. This I'll explain. IFF and this month 3 I'll explain. Let me just introduce a couple of slides. Okay. IFF. I'll explain you the backdrop of this IFF. Invoice furnishing facility. Now, I'll give you the backdrop of this invoice furnishing facility also. It's a political gamut. See, to look good, not to look bad. To look good, not to look bad. You have to give some statements in the public media saying that, look, we have made GST so simple. So when you read the GST law, you would have understood by this time, especially after looking at GSTR-1. It is not that easy what we understand as a layman. For a moment, an ordinary business person who doesn't know commerce, who just knows business of buying and selling, and he has just one software through which he'll just scan, amount comes, bill gets generated. Imagine that particular seller who has to file his GST returns. Imagine that particular seller who has to maintain books of accounts. Imagine that particular seller who should understand your time of supply provisions. The law is so complicated. No one can go and say, look, the GST law is so complicated. Rather, the finance ministry or some person from the indirect tax wing have to come and say, look, we wanted to make the law more and more simple. That's how this invoice furnishing facility came into picture. They say, we promise that instead of filing GSTR-1, instead of filing GSTR-1 on monthly basis, and instead of filing GSTR-3B on monthly basis, they say monthly basis, 12 returns, 12 statements. And GSTR-3B, 12 written. They have said that we have come with the IFF where quarterly basis, only one GSTR-1 to be filed. That means to say, they say from 12 statements, only 4 statements have to be filed. This is what government said. We made the business easier. We understood that common man should comply with GST. So we made life simple. So what they're saying, quarter 1, quarter 2, quarter 3, quarter 4. Month 1, month 2, month 3. Month 1, month 2, file a simple statement called IFF. File a simple statement called IFF. By the way, simple is not my simple. The government say. I'm just reproducing their statement. They say simple statement called IFF. In month 3, file a statement called GSTR-1. Similarly, for quarter 2, month 4, month 5, month 6. For month 4, month 5, file a simple statement called IFF. And month 6, file GSTR-1. This is what the government has promised. Now, so what is IFF? Invoice Furnishing Facility. All of you are aware, when you read the provisions of section 16, there is a provision, subsection 1, clause A, where they say, ITC has been communicated. ITC has been communicated in such manner as prescribed. Indirectly, they led that unless in GSTR-3B, the ITC is not appearing, the customer cannot claim ITC. This is what they say. How does the GSTR-3B will update? When GSTR-1 is filed. When GSTR-1 is filed. Now the question came in. Sir, आप तो बोल रहे कि month 1, month 2 आपको माने ये MSME बिजनेस को क्वार्टरली रिटर्न फाइल करने से फायदा होगा. 12 स्टेटमेंट फाइल करने की जगह पे खाली 4 स्टेटमेंट फाइल करने पड़ेगा. But now the question came here. So what will happen to this IFF, माने month 1, month 2? So they, if only month 3 GSTR-1 is filed, all customers will file, will be unhappy with MSME business people. Then they say, use IFF for, I'll write here, use IFF for reporting B2B supplies. Now, do you think it is so easy? Whom they are making fools? But see, I'm not criticizing. The fact that they made it simple itself is so complicated. In the interest of public so to do or to do so. When you read an exemption notification, they say, in the interest of public to do so, this section has been amended by this proviso from so and so date by so and so amendment. So, end of reading that, या कहाँ से शुरू किया, कहाँ पे end करना है. Now, what is it they are trying to communicate? कुछ भी पता नहीं चलता. This is how the government tax provisions are. And for this simple reason, the chartered accountant is, even till today, has been noted as the professional who can give a best service to the assessing. Be it your income tax return, be it your GST return, be it your declarations of any multinational companies, the reporting fussing. Reason, we read in between the lines. We have inbuilt in the patience among ourselves. When you're reading 6 papers in your final, read with 2 optional papers in the new syllabus, the kind of weightage, like no, for final, you have 4 modules for indirect taxation. You have 2 modules for income tax. When we are reading so much of subject, you're fine-tuning yourself to read the intricacies. So here, coming back, IFF is a facility brought in for reporting B2B supplies for the purpose of Section 16 complaints, right? So they said that month 1 file IFF up to only 50 lakh rupees. Month 2 again file IFF. How much? Up to 50 lakhs for ITC purpose. Month 3 file GSTR-1 including IFF details not permissible in month 1, month 2. That means to say B2C supplies plus B2B other than 50 lakh, everything I can report in month number 3. This is the purpose of my quarterly GSTR-1 being filed. Namrata, are you clear, ma? Month 3, what is that we are trying to explain? GSTR-1 excluding those IFF not permissible in month 1, month 2. क्यों? Month 1 में खाली 50 लाख तक दिखाना है. सर मेरा month 1 turnover 75 lakhs है. 75 माइनस 50, 25 लाख कहाँ पे दिखाऊंगी? मंथ 1 में IFF जगह नहीं है। ट्रेन में मैंने ट्रेन में 40 जने को बिठाने की जगह है सर, 10 जने एक्स्ट्रा आया हुआ है, कहाँ पे बिठाऊंगा? मंथ 1 मंथ 2 बिठाने की जगह नहीं है, मंथ 3 में उसको दिखाना पड़ेगा। So all those transactions which are pertaining to month 1, month 2, which could not be furnished using IFF, I have no option. I'll come back to this month 3 and then disclose. This is my simple IFF for you to understand. Students, any other doubts before I go further? Namrata, hope this is clear, ma? Chirag, are you clear with this explanation, ma? Okay. Let's travel further. This we have discussed. Now I'll travel to GSTR-3B. GSTR-3B, first I'll explain you to the written and then I'll come back to this particular. Let me just open my GSTR-3B. Jan 2023 onwards, GSTR-3B has been modified. I think this is old format, Rule 42, 43, B2C others. Okay. Let me just open any other latest written. Or I'll explain the basic view. Let me not confuse you to the core. GSTR-3B is a written for payment of taxes. GSTR-3B is a written for payment of taxes. So here, table 3.1, table number 3.1, details of outward supplies and inward supplies liable to reverse charge. I show outward supply, end, that is compulsory, end. My inward supply on which I am liable to pay RCM. So here, table number 3.1E, outward taxable supply other than zero rated, other than nil and exempted. So they're saying that my outward taxable supply other than section 16 zero rated, other than exempted, my taxable value along with tax thereupon. Then outward taxable supply zero rated. Now I have exports, I have SEZ with payment of tax, That data, that information I'm reporting in table 3.1 clause B. Outward taxable supply zero rated. Please keep in mind, students, section 54, when a refund has to be claimed, there's a matching concept. My data which is furnished in table 3.1B read with the data which is furnished in your table number 6 of GSTR1, both will be matched, and this data will travel to the customs portal where automatic refund of my export of goods with refund is processed. Now, all this sounds Greek and Latin. If someone have not failed, GSTR1, 3B and customs data. I'll make it very simple for you. Most of you would have watched this James Bond movie, this Hollywood James Bond movie, where you have high-end technology, high-end gadgets with James Bond. Now, the same James Bond theory is brought into my GST returns, where refund for export of goods, where the GST department says that GSTR1, there is a table called table number 6. GSTR-3B, this table number 3.1B. And customs ICAI portal. So it's a three-way matching. I, as a seller, I file my GSTR1. In GSTR1, table number 6, I show exports. The same data travels to GSTR-3B. In GSTR-3B, in this table 3.1 clause B, I'll say, look, this is my zero rated supply. on this zero rated supply, so much of IGST I'm going to pay. I'm going to declare my IGST. If both GSTR1 and 3B is matching, whichever is lower, 1 and 3B, this data travels to IceGate portal. On IceGate customs portal, if this export, whatever shipping bill, port code, etc., for a particular month is there, all will be matched. Once the data is matched, within 15 working days, that money will be returned, credited to your bank account. Hats off to section 54. This is one particular aspect. I would say salute to the GST portal, salute to the IceGate portal, where they have made it practically possible, where refunds can automatically credited to your bank account. This is one of the exceptional mechanism under GST, which was not there under erstwhile law. Coming back, other than your exports, I talked about SEZ. Now, GSTR1 and GSTR-3B, in case if I've made SEZ supply, I made SEZ supply with payment of tax, I can claim refund. My proper officer under GST is going to verify this table saying that, is there any zero rated supply? On this zero rated supply, have you paid any IGST? So he is going to check this data, whatever I have shaded. If this amounts are matching with refund application, my refund is going to be processed. Then outward supplies, nil rated, exempted. Other outward supply, remember table 8, whatever data I have filled in GSTR1, which is nil rated, exempted, will come over here. And table 8, non-GST will come here. C and E, they kept separately. Table D, my purchases on which provisions of 9 subsection 3, provisions of 9 subsection 4, 9 subsection 3, notified goods and services, 9(4), your promoter or your builder, where real estate transactions come into picture, I would be reporting for inward supply on which tax needs to be paid. Then 3.2. Now this is a information, or this is a summary for what out of 3.1a, this data where you have paid IGST, Now they're saying that details of interstate supplies made to unregistered, that is B2C, composition taxable persons and UIN holders, state-wise I have to show here. Supplies made to B2C, supplies made to section 10 composition, supplies made to unified UIN holders, special category under section 25 and 26, I have to disclose in this table. So why is this information relevant? You remember destination-based taxation? Destination-based taxation. To comply with destination-based taxation, the state where the tax has to come in relation to B2C. Reason? In case of B2B, place of supply is specified. In case of B2C, on the basis of this table, Batwara, the transfer of funds between union to respective state happens. This is the purpose. This table number 3.2, B2C supplies and composition supplies I have to specify. Then table number 4. Table number 4 has got elements A, elements B. I'll spend time on element A, element B and element C. This has been revised since Jan 23. I'll come to a new slide to explain this concept of table number B separately. Now, in relation to input tax credit, now please remember availment. Whatever written filed under section 39, my electronic credit ledger is credited by virtue of table A, is debited by virtue of table number B. I repeat, my ITC is credited, my ITC is debited. For ITC reversal under rule 42-43, others. So I'm going to explain credit under table 14. Import of goods, import of services. Only IGST will be filled up here. So I'll specify what is import of goods. This auto-populate is auto-populated from GSTR to A or to B. On the basis of your bill of entry, my import of goods, import of services, import of goods is auto-populated, In case of import of services, on the basis of your money spent in foreign currency, where 15 CA or 15 CB is issued, all those services where you are supposed to pay tax on reverse charge, I have to specify here. Then RCM, your inward supply under RCM other than 1 and 2, your GTA, your security, your direct testing fee, all those aspects in table number 3 I have to fill. What is IGST, CGST, SGST? Then ISD, based on your GSTR-6, this is auto-populated. You need not do anything. You can just avail this particular credit. All other ITC. Now, this all other ITC, let me come to your my PowerPoint presentation to explain more on this 4A5. Or I'll explain here. 4A5, all other ITC, on the basis of GSTR1 filed by supplier. So all your credits, only when your supplier has filed GSTR1, this data, all our ITC is updated. Please remember, all your notices received under GST, 2A versus 3B. 2A versus 3B. For financial year 17-18, 18-19, they say any supplies where your supplier has filed, is GSTR1, then the credit is updated in 2A. On the basis of this, if avail the credit in 3B. So what if there is a gap? There is a circular 183, where they say, my supplier would have done a mistake. Instead of showing B to C, he has shown as B to C. Instead of showing interstate, he has shown as intrastate. Or he forgot to disclose the supply itself in GSTR1. All those mistakes, they say, get a CA certificate or self-certificate. Greater than 5 lakhs, CA certificate. Less than 5 lakhs, self-certificate from the supplier. Circular 183 is good enough to explain this particular gap. This is relevant for table number 4A, table number 5. Now, in relation to table number 4B, this is a new amendment with effect from Jan 23. I'll come to my presentation to explain in detail this particular aspect. Just give me a minute. Let me insert one fresh slide. Now, GSTR-3B, all of you have understood table number 4A5. 4A5 is auto-populated on the basis of GSTR1 or GSTR4 based on NRTp or CTP, based on GSTR1 furnished. GSTR1 furnished. Now, this data they have explained us in table number 4B as the following. Table number 4B, there is option for table 1, option for table number 2. Table number 1, ITC reversal. ITC reversal on account of section 17 subsection 5 or ITC reversal under Rule 42 or Rule 43. Rule 42-43 on account of input tax reversal in relation to common credits tax when I supply exempted goods, when I supply taxable goods, when I supply exempted services, when I supply taxable services. I apply Rule 42, Rule 43 or other ITC reversal, other ITC reversal. So wherever, like, what is that other ITC reversal? Probably on account of your non-compliance with payment to be made within 180 days. Within 180 days. So here, if I don't pay to the supplier within 180 days, I'll reverse the credit. Once I make the payment to supplier, again I'll take back the credit. So here, they say whatever auto-populated data is there, you reduce on account of table 4B1 for these reasons. Then you have table 4B2. ITC reversal on account of non-compliance with section 16 subsection 1 related complaints. Like what is that? Goods or services, like instances, goods or services not received, or tax invoice not available, or probably any other reason, payment is not made by the seller. I know that this supplier is a regular defaulter. He uploaded GSTR-1, but he is not going to make the payment. Unless and until he is going to file his GSTR-3B, I'm not going to claim the credit. So here, the new return mechanism effective from Jan 2023 talks about this disclosure. Assuming for a moment, there's an auto-populated credit of 100 rupees. If I enter in table 4B1, 20 rupees. If I enter in table 4B2, 15 rupees. My GSTR table number 4C net ITC avail is going to be 100 minus 20, 80, 80 minus 15, that is 65. 65 is going to get credited to electronic credit ledger. This is a new mechanism pattern which is brought effective from 1st Jan 2023. That means to say, you are supposed to, whatever credit is auto-populated, don't remove this. Don't remove or not to update on the basis of books of accounts. They've asked us, please examine this 4B1, please examine this 4B2, then travel the ITC to 4C. This is what they have said. Sir, I have done this. What will happen to this 4B2 in subsequent months? Then they brought another table called 4D1. What is that? ITC par in 4B2 of previous month avail in current tax period. In the sense, say month 1, month 2, month 3. I have various months. My table 4A5, I have 100 rupees, say 120 rupees, say 150 rupees. 4B1, I have said my ineligibility is 20 rupees, 10 rupees, 10 rupees. 4B2, I have said that I don't know, I have not received goods, say for rupees, 20 rupees. for rupees 20, for rupees 20. Then on the basis of this information, my electronic credit ledger is updated for 100 minus 40, 60, 120 minus 30, 90, 150 minus 30, say 120. Now, this is how generally I report. So what if, now, what if this 20 rupees, I have an intent to 20 of month 2 to be availed. Let me write here. Rupees 20 of month 2 to be availed in month 4. Now, why is that I'm doing? In month 2, goods worth rupees 20 rupees, I am not availed. Reason? Sir, I don't have tax invoice. In month 4, I have received tax invoice. So now when you travel to month 4 auto-populated credit is 100 rupees. I add manually 20 rupees. This is pertaining to month 2. Assuming in the month of 4, my ITC reversal is for 10 rupees. For clarity, nothing. So my total net ITC is going to be 120 minus 10, 110 total ITC. In 4D1, in month 4, I'm going to mention here 20 rupees saying that, Baba, from month 2, whatever 20 I have parked as suspense, that 20 has been availed in table 4A5. In month 4, I have availed this 20 rupees. Now, how does the department get to know using this particular table? 4D1. Now, this is what I explained for one transaction. This is going to be there from Jan 23 going forward. Now, more than a chartered accountant, all of us are becoming accountants to maintain this track. Now, if you ask, sir, is this the way returns have to be filed? I would say, no choice, no choice. You are bound to file returns and you are bound to maintain this track. Right? Now, Namrata, what is to your question? Do you like watching movies? No time, man. I like, but honestly, I love my profession more than movies. I'm so much of into this curriculum and the practice. I like watching movies, but I'm watching more movies in GST department by attending GST, these cases and other things. We watch all these, sham transactions, supplier running away without paying taxes, GST officer catching hold of a truck just because of some clerical mistake in e-way bill updation. So we watch movies in our office and GST department. Coming back, you are asking this question. What is all other ITC as per 2A and 2B? Simple. Whatever GSTR1 uploaded by the seller, that comes into my GSTR-3B table number 4E5. This is the data which is coming in using form 2A and 2B. Okay, what is 2A and 2B you're asking? Form 2A and 2B is nothing but this is indicating my 2A or 2B. I'll explain this way. Very good question. Very good question. Namrata is asking, sir, what is form 2A or 2B? Simple answer to you. The breakup of ITC in table 4A5 bill wise is available in this particular form GSTR2A, form GSTR2B. Sorry, I have written 2A like this. I should have written as GSTR2A, GSTR2B. So this data, Namrata, bill wise, if I want to see, like whatever auto-populated in this table, I'll get in this particular form. Now, the next question, what Namrata is asking, what is GSTR2A? What is GSTR-3B? Now, answer to that question, information is dynamic in GSTR-3A. Information in GSTR-3B is static. Information in GSTR-3B is static. That means to say, supplies uploaded beyond due date. This information, like example, for month 1, month 2, my due date and actual date. Month 1, my due date is 11th January 23. Month 2, 11th February 23. Actual data filing is 15th Jan 23. Actual data filing for month 2 is say 16th Feb 23. Now when this is happening, my GSTR-3A is updated even if the supplier has filed after the due date. So when you download GSTR-3A, on 11th Jan 2023, you will have say 100 line items. When you download GSTR-3A on 15th Jan 2023, 100 plus another 10 or 20 line items get added. That happens in GSTR-3A. But in case of GSTR-3B, this is static. That means to say, when you download GSTR-3B for month 1, only those suppliers who file their returns within due date is available. Any data furnished by a supplier after the due date is not available in GSTR-3B. Now, government say, this is a time and tested travel journey of GST, where GSTR-3B came into picture. Government say, look, I'll give you a static ITC. Any supplier who file their returns before due date, I repeat, any supplier who file their return before due date, that comes in GSTR-3B. And this is the basis for ITC availment in form GSTR-3B. So if you want to file GSTR-3B, Namrata, only that credit which is coming in form GSTR-3B, you can avail. In GSTR-3A, it is just a summary. I cannot avail any input tax credit. Rahim is asking this question. Sir, 20, which is in table 4D1 in month 4. So 20 will not be allowed. No, Rahim. It is just an information. 20, what I have shown in month 4, whatever I have shown in month 4, it is just an information. This is just a information to proper officer. Department वाले को month 4 में क्या कर रहे हैं हम? There is a auto populated credit of 100 rupees. Now this 100 rupees, I'm adding manually 20 rupees. Now department fellow will ask, Rahim, month 4 आपका GST return में, month 4 in your GSTR-3B, only 100 rupees available, right? Only 100 rupees is available. Why is that you are taking 120? So I am going to explain to the GST officer, sir, 100 rupees on the basis of GSTR-3B may credit later on. The balance 20 pertaining to month 2, I am availing in this particular month. Now, this form GSTR-1 is named as Electronic Credit Ledger Reclaim Statement. There is a new form which came into picture, Electronic Credit Ledger Reclaim Statement. Now, this is a new written or new statement which needs to update it for the purpose of 4D1. Examination. Again, students, none of these are going to be tested in your examination. I'm making you to understand the form. I'm making you understand the data. I'm making you to understand how to fill this particular data. what is there from examination point of view, what content I have to fill in this particular form, I have to fill. So my job, again, I'm telling you as a teacher, my job is not to make you to study only what is there in the book. What is something beyond book, what you have to comprehend, which comes by experience, I'm trying to make you learn. Clear? Namrata, how to, like, to be passionate, what is that you like, do that more and more. When you do more and more, what is that you like, this passion comes automatically. I come from science background. I've done my BSc electronics. When I came to this course called CA, I don't know anything about debit and credit. I struggled, but that struggle made me to understand something on taxation, something on accounting, something on law. And I've learned many good things from my beloved faculty members. All those gurus who have taught me how to do an accounting entry, how to read income tax provisions, how to read tax provisions. They made me to understand this subject of CA more and more in depth. And that made me as an inspiration or as a passion to become a teacher along with a practicing chartered accountant. So this is how I found a passion in teaching. And my job when I teach to you is to make you understand the concepts, is to make you to understand the background, why you are studying this, how it is going to help you. So that my job is done for the day. Right? So this is a passion with which I come for teaching. Students, we are at 9:03. Let's stop our discussion. Next class, we will continue with our discussion on filing of returns under GST. With this, good night, goodbye. Ashok.